Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for Financial Literacy Month, which takes place every April, we have Natalie Campisi with Forbes Advisor to discuss identity theft, how to save in an inflationary environment, and home buying season. Natalie, it's great to see you as always. Welcome back to Trade Talks.
Thanks so much. It's great to be here.
You got it. Let's start with identity theft. What are some of the latest scams?
So there's a lot going on right now. One, we're in tax season. So scammers are always looking for ways to target people, from people who are looking for tax relief or tax help to even high net worth individuals. So every year, the IRS puts out their dirty dozen. You can go to their website and look at the top 12 scams of that year. Some very popular scams are targeting people online through their email or even social media and offering tax relief help, whether that's help to pay tax, to pay taxes they may owe, or to help getting their returns, things like that. What's really just important to know is to stay vigilant. Don't click on any links. Don't respond to any emails. If somebody calls you and asks for personal information, do not give it to them. If you do need tax help, go to irs.gov, and there's a list of services and places where you can get help either at a discount or for free. And so you know that it's that it's a legitimate source. Of course, always you can contact your lawyer or your accountant if you have any questions.
Inflation's at 5%, clearly higher than the Fed's target of 2%. What should people do with their money?
So right now, inflation is still high. It's like you said, it's higher than the Fed target rate. And the national average for savings accounts is pretty abysmal. It's less than 0.5%. So if you have your savings in one of the big banks, Bank of America or Chase, you're not getting a great return. So what you want to do if you're looking for a place to park your money, but you still want access to your cash. So, for example, you right now, you might not want to put it in the stock market because it's still a little bumpy. A great place to put it is called an I-bond, and it's backed by the US government. So it's very low risk, a place to invest your money. And through April, so until very end of April, you can buy up to $10,000 in I-bonds and get a 8.9% return for 6 months. So this is really good. This is better than most high yield savings accounts, certainly better than money markets and CDs right now. And basically how it works is you go to treasurydirect.gov. It's the only place you can get the I-bonds. You sign up and you can buy up to $10,000 in May. That rate is going to change because it's pegged to inflation. So a portion of that rate, 6.49% of it, is the inflationary rate. The other the 40 basis points is fixed. In May, that is probably going to be slashed in half, if not lower. So this is if you want to, put some money in an extremely low risk account and get a pretty decent return, I-bonds are amazing. You have to keep that money in there for at least a year. And if you don't get any of the interest. And if you take it out before 5 years, then you get like a 3-month penalty. So that's not too bad.
Home buying season is here. What's the market like for buyers and sellers?
It's not looking great. So we're still dealing with some of the same old issues that we did, over the last few years, where very low inventory. Home prices are still high, although they're not accelerating at the rate they were accelerating in 2020, 2021. But the problem is interest rates are so high right now. So we're looking, they're starting to fall, which is a good sign, but they're still around 6%. So once interest rates start to cool, once we see inflation, start to ease up a little bit, I think interest rates will probably start to fall, and we'll see, more home buyers get into the market, more people willing to sell, because a lot of homeowners are sort of locked into their houses right now. They don't want to give up their low interest rate that they maybe got, in the early 2020, 2021, where they were, getting 3% interest, things like that. So home buying season is going to be tough. Again, home builders aren't building a lot with what's going on in the banking industry. Money's kind of tightened up for builders and things like that. So we might have to wait until next year to see the housing market open up a little bit more.
I mean, part of the issue is it's just unaffordable. People are priced out of entry-level homes. I just can't imagine, a young couple or someone out of school what's the median price now? Over 400,000. I mean, are you seeing homes become more affordable?
Actually, we've seen prices dip barely. In February, they started to drop a little bit, not much at all. So they're still up because, we saw these like 20% year over year increases. So they're still extremely high. So I think what we're going to continue to see is that trend of people moving to more affordable areas. We're going to see, exurbs and kind of boom and more growth in those areas, because there's just not enough inventory. So that's why these, bigger cities, even mid-sized cities, the prices are not dropping because there's simply not enough homes on the market. And I think we're going to probably continue to see that. Construction is a long way from keeping up with demand. So that's probably not going to ease the pricing crunch either. So I think what we're going to see is just a lot of movement to more affordable areas. One thing I have heard that's pretty interesting is people that are staying in big cities, they're renting in big cities and then they're buying in more affordable areas. So they might rent an apartment in New York and buy a home in the Catskills. And that's a long-term investment. It's part of their retirement plan. So they can, rent out these homes. It's still, they can afford to buy them and rent them out. And then maybe at some point either sell them or retire to them.
All right, Natalie, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Jill.